All right, everybody, it's Thursday, August 14th, 2025. Our episode begins with our headline, Buffett buys UNH stock. Here's the price he might sell. Warren Buffett's teacher, the same guy that basically taught Michael Burry what he needed to know for his success, his name's Benjamin Graham. He wrote Security Analysis and The Intelligent Investor. So instead of giving you the potential sell price right off the bat, I think it's worth your while to learn how to find stocks like this in the first place. Now, we all remember when UNH was hitting the news earlier this year, dropping by 60%, which is the first thing to bring it onto your radar. Wait, a big company that dropped 60%? Well, the first thing you want to take a look at is this a company that's a leader in its industry? And yes, indeed it is. In fact, it is the largest part of the health services sector in the stock market. It's not just a leading company, it's the leading company in the industry. Now, a fair price for a leading company in an industry, according to Benjamin Graham's book, The Intelligent Investor, you would calculate the average earnings of the past 10 years of the company, multiply it by 25, and also make sure that its current PE ratio isn't much higher than 20. My personal favorite way to do this is just to go to macrotrends.net. Here's the company right here, United Health Group. All you have to do is click on the revenue profits and then earnings per share. And what I do, I use ChatGPT. I just highlight the past 10 years. I say find the average and multiply by 25. And there you go. There's my answer, $333. Graham would enjoy getting especially greedy if it dropped as much as 30% below a fair value, which it recently did. My own cost average basis is this line right here at 266. Well, it's supposed to be at 266. That was my cost average. Benjamin Graham talks about how temporary developments in companies can send them to these types of prices. And assuming that they are temporary and that the company is going to survive for a much longer period, it provides a extremely juicy opportunity. He also says, if you're buying it at this level, I mean, you might as well wait until it's at a bit of a premium, around 30% premium, which would be $433. So assuming Buffett is sort of following the same model of thinking, I'm thinking he will likely sell out, especially if we get to $433, which is still a lot lower than the previous high of almost $600, but a premium to what's considered to be a Benjamin Graham classic fair price. When I bought this, I believe I said on this show, by the way, that I would be very surprised to see Buffett not buy this stock at this price. Benjamin Graham core value investing is the core of my show, of this show, of what I do, how I think about markets and valuations and prices. Make sure to subscribe to the channel to keep up with more of my ideas. Moving on to our next headline, PPI super hot and gold sells? Market enters chaos mode. Seems like everyone's been talking for months at this point. When is the tariffs going to hit the PPI? And it looks like it happened for this report, with month-over-month core PPI rising by 0.9%, above the expected forecast of 0.2%, and much higher than the previous of being completely flat at 0%. So now that it's here, how long will it last? That's the million-dollar question coming from Fed Chair Jerome Powell himself. Markets really went all over the place entering chaos mode, but the most notable piece of this is with inflation being higher on the producer's side, a lot higher than expected. I mean, normally This would be a gold bull's dream come true, right? Gold's about to go to the moon. I'm sure everybody that saw the PPI report before they saw the price of gold was very excited about what gold was about to do, and yet it fell, dropping, not granted all that much. Right now we're at negative 0.6% on the day. We'll get through the rest of the charts momentarily. The way I can describe it overall is just overall chaos going on. We also had initial and continued jobless claims come out today, essentially flat, and initial claims not yet concerning. And the previous report was actually revised up 1,000, and then also the continued claims was actually revised down 15,000. And with today's report being 1.953 million in the continued claims, it's starting to look more flat than anything. Before the revision last week, it looked like it might be running away a bit more to the upside, and now a little less so. On to the community topics. What moves, if any, did you make today? Did you buy anything? Did you sell anything? And why? Why'd you make those moves? Love hearing your comments in the community section. In the comments of the video, what does Robschild do? Bought a little bit more HYG puts just because junk bonds just seem chaotically too expensive right now. Junk credit spreads below 3%. It's still one of my favorite positions just because of the fact if all rates go up, then HYG goes down. And if rates are dropping tremendously, it's probably because credit spreads are blowing out. And credit spreads can't go negative to treasuries. And so it puts a ceiling on how high HYG can get. I talked about yesterday potentially getting more into the Bitcoin short. I didn't because Bitcoin looked bullish last night, and we actually had a closing candle above the wick, above the topping tail that we had back in July 14th. Usually that negates the topping tail and says, hey, Bitcoin can go higher, and that's what I was expecting, and it did. It went higher for a little bit before dropping today by 4.4%. No idea where Bitcoin's going to go from here, but I am still short with a small portion of my portfolio. What did you do today? Did you buy anything? Did you sell anything? Comment below. Coming up tomorrow, we have retail sales and consumer sentiment coming out. Next week, there's not a whole lot of data coming out. So the major things on my radar are tariff updates, things going on with Russia, especially right now, and then the weekly jobless claims that come out every Thursday. Thank you so much for watching, subscribing. Subscription button's right here. Click subscribe if you haven't already. Commenting and supporting the channel. No changes to the daily reminders, macro views. Read my website to go through them. And no changes to the crystal ball readings nor the Robschild portfolio. Moving on to the charts, with the PPI coming out hotter than expected, the Fed funds futures change was really mostly in the December meeting. We went from yesterday a 51% chance of ending the year with 3 cuts, and now looking like it's going to be 2. Yet the S&P 500 was able to still eke out a 0.03% gain on the day to all-time closing highs. This is on my website, but I want to reiterate once more, the dividend yield on the S&P 500 has never been lower. In fact, we found a new low today at 1.19%. We've never seen it this low since the dot-com bubble, getting to an ultimate low of 1.11%. From the 1800s all the way until 1990, it was expected that your stocks would pay out between a 4 and 5% dividend, sometimes reaching up higher, because stocks are risky. Companies can go bankrupt and you can lose the whole position. And then that cash that you get, you can decide what to do with. Since the 1990s, supposedly we've changed how we see dividends. Apparently the idea is that, if the company just keeps hoarding all of the money, they're just going to keep making more money. I mean, in the end of the day, it's all for you, the shareholder. Unfortunately, if they're only paying out 1.19% of it to you, you're relying a lot on other people to simply pay you a higher price than what you paid for that stock over all else. Similar to how a Ponzi scheme works, by the way. With stocks marching higher, the VIX, the fear gauge pricing of options contracts, only rose to 14.82. No sense of fear whatsoever. The 10-year Treasury yield rose by 6 basis points today, seeming like it has no idea what it wants to do. After all, we're very well within consolidation of a bear flag from Friday, August 1st poll, yet this green candle today engulfs the past 1, 2, 3, 4, 5, 6 trading days. So if it goes up from here, I think the trend line connecting May 22nd high to the highs mid-July will likely be a point where it stops going up around 4.39. I find it pretty wild. The TYX, the 30-year Treasury bond yield, had formed this like perfect head and shoulder stop that we broke through, retested. Now we're just fighting a battle royale here at this line. I'm very curious to see if this hot PPI data will drive yields higher and higher from here or not. It's not looking like it's running away to the upside yet. Similar thing even going on in the 2-year Treasury yield, right? We have this pretty obvious bear flag here and less of a significant bounce in the yield today. Sorry for the charts being slightly out of order today. I want to reiterate that junk bond credit spreads are today at 2.9% below that 3% threshold that marks, in my mind, complacent periods like right before the Great Financial Crisis when it dropped to 2.46 before exploding to almost 20. And we are at a place where we're at 15-year lows in this range below 3%. Higher risk in lending, typically you want higher yield. When it's only a tiny bit higher yield, it's a pretty big warning sign. I also noticed that the S&P 500, although going up a little bit today, the advanced decline line going down, so that can be a signal that maybe this is a top here, at the very least short-term top. With the PPI coming out so hot today, you might think, well, what does the market think is going to happen with inflation? The best place to look is the 5-year break-even inflation rate. This is what the Fed uses to determine what the market is thinking inflation is going to be. We ticked up today only a tiny bit from an expected 2.42 inflation rate to be the average inflation over the next 5 years and the 5-year break-even inflation rate. And then in the 10-year, also ticking up from 2.37 to 2.39. Notably, not higher than very recent previous highs of 2.45 and nowhere near the highs back in 2022 when we were pricing in the 10-year break-even inflation rate to be near 3%. Another thing showing that the markets are surprisingly not as worried about as inflation as you might think. The dollar actually rose today. And whenever we have chaos going on in markets, I always like to check in with Dr. Copper with a PhD in economics, not budging today, going completely sideways, saying, none of this, it's all noise, none of this matters. We already knew PPI was going to surge up at some point because of the tariffs, and here it is. And so I'm not going to move an inch until we actually get something else developing. However, we're still in this pretty scary looking bear flag thing on copper. Again, this big drop was a geopolitical event, so I'm not sure we can count this as a poll, but I guess we'll see how it pans out. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching. Don't forget to subscribe, and see you later. Robschild.